This is the Financial Beat, helping you hit all the right notes in your financial plan. So sit back as we strike up the band. The Financial Beat with Logan Sadler starts now.
Welcome to the Financial Beat with Logan Sadler. First show of the new year here, getting ready for 2023. It is amazing that we've been doing this show for a pretty while now, Logan, and hard to believe that here on the Financial Beat, we're moving into a brand new year. I'm excited about it. How about you?
I am. For a minute there, I was like, why is he saying 2023, right? And it's like, well, I guess we're here.
It's kind of, I used to have trouble, changing from one year to the next and writing checks. But, I don't write checks anymore. So,
Auto pay, right?
Yeah, exactly. So don't have to have that concern. But it is going to be kind of strange saying 2023 because it seems like in some ways, 2022 just got here, so crazy. Anyway, Logan Sadler is on the radio, everybody. Go tell everybody and start out the new year right with all kinds of good financial advice here on the show. And we look forward to getting into some interesting topics today. If you'd like to get in touch with Logan Sadler, VP and Chief Investment Officer at Regari Financial, the number to call is 888-823-PLAN. That is 888-823-PLAN. And we will talk about why having a plan is so important on today's show. That's why it's kind of incorporated into the number there, 888-823-PLAN. Hey, Logan, I think maybe a good way to start off a brand new year of shows, maybe kind of recapping what happened in 2022. It has been an interesting and a very odd year, to say the least. How would you wrap it all up?
Yeah, that's actually a pretty good way to start it out there. Interesting and weird, right? That's what I would say but it sounds very similar to the last, 2 or 3 years we've been looking at, right?
Yep.
Been just kind of, I think I said a few weeks ago, it's been kind of hard to find direction, right? And last year was just like that. And from us as a business standpoint, I always just want to say thank you to everybody that has been listening to the show and supporting us and the YouTube channels and all the clients that have came on board through these platforms, because it's just been, for us, it's just been such a great few years doing this show and bringing the information to you guys, and we've been getting a lot of positive feedback on it, and so we wanted to say thank you for that. And from a market standpoint and from a lot of other standpoints, it was just a very interesting year where things were constantly kind of searching for some direction there, and it looks like heading into the start of 2023 here, it's going to be somewhat the same, and hopefully things kind of get back on course to what we can call normal, all right? But there's just so many exciting things going on, and we're really looking forward to this new year, because 2022 was very interesting, but like I said, we made a lot of great relationships. I know talking with a lot of you, we're very excited. A lot of people retired that we worked with last year. Sometimes people come in, Ron, they're like, hey, I'm retiring in 3 years or 5 years. It felt like almost everybody last year that came in was like, hey, I'm retiring this year. So it was fun on our part to get all those plans put together and help all those people transition. And some of them are listening to the show, Ron, now, and they're retired, right? So it's kind of nice.
Well, yeah, and I know a lot of people listen to this show for good information, and that's a lot of what you do, and you certainly did a lot of it in 2022, and will continue doing that in 2023, and that's a good time for a good opportunity for me to work in a good quote here, a quote of the week from Zig Ziglar, the old positive thinker, and he once said, expect the best, prepare for the worst, capitalize on what comes. And in a lot of ways, that's kind of your philosophy too, isn't it?
It is. That's really a great, Zig Ziglar has some, if those of you have never heard of him, you should definitely look it up, because he has some great quotes out there. But it's very, very true, because you could plan for so many things, but at the end of the day, you got to capitalize on what comes, right? And I think that's kind of what he's saying there. And that's a lot of our belief too. And I know a lot of the people that we're talking with already for 2023, that is a lot of the conversation here, Ron, is, hey, what goals can we set? What's this year going to throw at us? But at the end of the day, we got to make sure we're putting ourselves in a situation to be able to prosper, right? No matter what life throws at us, and making sure we're staying on track, because we never ever know how these years are going to go, right? There's a lot of fundamental analysis out there. There's a lot of numbers to look at, a lot of data, and you just never really know what direction it's going to go, but you got to make sure you're putting yourself in a good situation to capitalize when you can capitalize.
I know that recently, here we are on the cusp of a new year, and a lot of folks got in touch with you during the last weeks of 2022 to take care of some business that they needed to take care of. And I know that you always stay on top of these situations. It's important to stay informed of, what you need to do from year to year. And that's why, folks deal with you, because you do a good job of keeping up with a lot of this stuff for them.
Yeah, that's a great point, Ron. Like, that's one of our favorite things that we like to do is every year we should be setting goals, right? I think us as a firm, we're very goal-oriented. As far as me individually, I'm very goal-oriented in my own life, in my own career, and we like our clients to be goal-oriented. What are we trying to accomplish this year? And that's what I always talk about at the discovery meeting, Ron, is I ask, what are your goals in retirement, right? Because I feel like to have goals is something to kind of look forward to, something to kind of measure your level of, not success, but measure your level of completion, right? And it's nice to check things off when you get things done. It makes everybody feel good. But I think, like you said, we have a lot of our client meetings that we start the first quarter of the year, and it's really, hey, what are we looking to accomplish this year? Is it saving a certain amount of money? Is it retirement? Is it helping grandkids go to college? What are these goals? And so that's one thing we kind of wanted to start off the show this year, Ron, like you said, is, hey, those of you out there that are getting ready to start goals and to get things going and looking for ways of what you should be doing in 2023, I would definitely start with, write down 3 or 4 or 5 goals, and it's never a better time to start than now, because we're right here at the beginning of the year, and kind of measure yourself, and of course make sure they're obtainable, right? But measure yourself and see where you're at on trying to achieve those goals and how you look rounding out at the end of 2023.
Logan, I never have really been much for making New Year's resolutions and all that kind of thing, and the few times that I've done that, I haven't really followed through on them. But yeah. That's a good
guilty too.
A good opportunity for folks to make some New Year's resolutions when it comes to their financial matters.
Yeah, you're right, Ron. I think a lot of us out there could be better, right? As far as being organized or being more on top of financial planning. I remember I met with a client who became a client, actually, who was at the end of last year, and that was one of his things. He's like, you know what? I always put money away. I was always told to put money in a 401k or put money here, and I just kept doing it. And all of a sudden, I got ready to retire, and I thought, I have no idea what I have, right? He was like, I really have not really sure how it's invested or how it's performed or what the cost or what the fees are or if I could be doing better. And he was getting ready to retire, and it just kind of created that huge sense of urgency to where, hey, you know what, maybe I should be a little bit more on top of this and being able to, keep track of things, educate himself. And he actually ended up coming on board with us because we were obviously a firm that could facilitate a lot of that education as well as help implement a lot of the strategies that he was wanting to implement. But it was just funny how you do see New Year's resolutions kind of transitioning over into 2023 to making sure you're staying on track of a lot of this that we kind of let slip sometimes because life gets busy. You got kids, you got grandkids, or whatever stage of life you're in, but it just seems like life goes faster and faster nowadays. And sometimes the important things like financial planning and some of that takes a backseat to some other things that might become more important. And all of a sudden you've been, a few years out there floating, I'll say, and you're not necessarily as organized or really have much of a perspective on what you have and really don't have much of a financial plan at all. And next thing you know, you're 55 years old or you're 60 years old and you're wanting to retire in a year or two. And it's kind of, I would say, scramble mode to make sure you're getting everything together and putting yourself in the best situation you can.
Well, here we are at the end of one year and the beginning of another, and it's a good time to go ahead and place a phone call to Logan Sadler's office at Regari Financial, 888-823-PLAN. That is 888-823-PLAN, your number to call if you'd like to have a discovery meeting. You want to get together with Logan Sadler via Zoom or maybe in the office or maybe even just a phone call. 888-823-PLAN is your number to call to make it happen. It's not going to cost you anything, and there's no obligation at all. In other words, no strings attached. Why not take advantage of the opportunity here at the beginning of a new year? 888-823-PLAN, your very important number for Regari Financial with offices in Hemet and Redlands. Wherever you are in Southern California, call that number today and you'll be on your way to a bright and successful 2023 and far beyond. 888-823-PLAN. I'm Ron Stutz along with Logan Sadler, and there's more on the other side of this timeout.
At the end of the day, no one truly understands your financial wants and desires better than you. That's why it's important to have financial independence. This means you can work when you want, you know exactly where your income is coming from, and most importantly, your finances are stable. If this sounds like something you want, well, text the word advice to the number 21,000. And Logan Sadler and his team at Regary Financial can provide you with their free guide on achieving financial independence. The free guide will show you how to create an action plan for getting to where you want to be. It'll explain how to calculate a financial independence goal. And it'll define what an ICE egg is and why it's so important. Download it now by texting the word advice to the number 21,000. Again, text the word advice to the number 21,000 to gain your financial independence today.
It's getting to know you time.
You're listening to the Financial Beat with Logan Sadler. And Logan, quick question here for you. A lot of folks want to get to know you a little bit better, and I have a question here for you about your personal life. Did your family ever pressure you to attend a certain school or pursue a certain career path?
You know, that's a great question, and no, they didn't. It's kind of funny that I actually followed down the path of both of my parents at one point.
Yeah.
But they never really pushed me one way or the other. My dad grew up in the construction industry. You know, was very kind of diverse in that industry. Started at a young age, and you know, I actually went into right out of high school. I went into while I was going to college. I went into the construction world for numerous amounts of years. My mom actually grew up, you know, as she got her career going, she became a financial advisor. And so it's funny, I actually started in the construction industry and then transferred back over to the financial planning industry now and been here for several years. And it's something where it's funny. So I've been down both those career paths and I never got pushed one way or the other, but it is something where my parents were always the ones to kind of give that support and, you know, that support system that you need, I feel, to kind of sometimes be successful. And they definitely helped me get where I was getting, but they didn't push me in one way or the other.
That is a great situation to have, and a lot of folks aren't lucky enough to have that particular scenario, for sure.
I agree, yeah.
Hey, thanks
Very
for
lucky.
sharing that. That is our Getting to Know You session today on the Financial Beat. Logan Sadler and I will be right back.
We all know Congress has approved trillions of dollars in spending the past year with stimulus packages, infrastructure plans, and other programs. It's all on top of the tens of trillions of dollars of debt our nation already owes. Yet we're living with some of the lowest tax rates in history. Now, how long do you think that's going to last? Learn how you can prepare for future tax implications by watching Logan Sadler of Regary Financial's exclusive webinar, How Tax Planning Changes Through the 4 Stages of Retirement. Just text the word advice to the number 21,000, and we'll text you back a link to the webinar right away. Text advice to 21,000 and make sure you don't have to pay a cent more in taxes than you have to. To access the free webinar right now, text advice to 21,000.
You're listening to The Financial Beat, striking the right chords in your financial plan.
Welcome back to more of the Financial Beat. The beat goes on, as they say. Logan Sadler is on the radio show here. 888-823-PLAN is your number to call if you'd like to get in touch with Logan, have a conversation with him. Now, I know you know, after listening to this show, Logan's a friendly guy, easygoing. It's going to be a low-key conversation. There's not going to be any pressure, any salesmanship at all when you have that conversation with Logan. It's just a good way to get in touch with what's going on with you financially and maybe how Logan might be able to help. 888-823-PLAN is your number to call to make that happen, 888-823-PLAN. You can also get a lot of good information from other sources that Logan has put together. For example, Logan has his own YouTube channel, and there are also podcasts out there. How many, Logan? You tell us.
Yeah, there's over 85 now, I believe, podcasts uploaded and put on there. And
wow.
Yeah, it's been quite a journey me and you have had on this show here. And again, just happy to continue this streak here. And those of you out there that want to listen to more episodes of the show and maybe listen to it more on your time when you're driving around or at home or wherever you like to listen to radio shows or podcasts, you can head over to Spotify, Apple Music, Amazon, again, wherever you download podcasts and type in The Financial Beat, and all those will pop up. And like I said, there's quite a bit on on there, so you're bound to learn or educate yourself on some type of topic.
Yeah. How about your YouTube videos that are out there?
Yeah, we're still doing those heading into 2023 here. And so basically, you could head over to wherever it is you could watch YouTube, right? Whether it's on your phone or on your computer, and you could type in The Financial Beat on YouTube. And again, there's a lot of videos on there now of, how to prepare for retirement, how to know if you're ready, how to assess risk tolerance, a lot of good topics like that on a video format. Again, they're between, 3 to 10 minutes long, depending on the topic. And you can head over there and click subscribe, because again, we actually upload weekly on that channel for new videos for you guys, and we'll continue that through 2023.
A lot of good ways out there that won't cost you a penny. Good ways to get good financial information. And again, if you want a conversation with Logan, the number is 888-823-PLAN. And let's talk about overconfidence. A lot of people get overconfident in their financial lives, and sometimes that can lead to disaster. Let's examine a few examples. First of all, some folks have overconfidence in the stock market, or their ability to manage it by themselves in their portfolio. And I'm sure you've seen some examples of that over the years, haven't you?
Yeah, I have. It was funny because there was a client who actually came on board with us last year. She actually listened to the radio show as well. And it was funny because she is actually pretty sophisticated. She knew quite a bit about the market, and I could just tell by our first initial conversation. And anyway, I'd asked her, hey, do you have a financial advisor? And she said, well, funny enough, I'm actually talking with you about, possibly coming on board with your firm. And I said, well, yeah. And she said, the reason why I'm doing that is I was actually going to do all this myself, right? And I go, oh, okay. And she said, what I was going to do is I was managing my own account. She had about $100,000 in an IRA account that she had managed, right? She did all the investing on it. And that was like her testing herself. And then she had over $1 million in retirement accounts that she had at current 401ks, and was going to be rolling that over and was going to do all her financial planning herself. Well, long story short, as you guys know, 2022 did not end up so well for many people if you were in the market. Yeah. And it was funny because what she had said was, I thought I was really, really good, and I couldn't, I knew exactly what I was doing and I would be fine. She said, well, the market got so volatile that she really didn't know what she should be doing. Should she be selling? She was getting ready to retire, right? And so all these things were running through her head. She ended up putting all of her money in cash and calling us, and came in. And that's why she was meeting with us, was because she had decided, you know what? She was too overconfident, had exposed herself a little more than she was actually comfortable with. And it was something where, it's time for me to look for somebody that I trust, that I want to work with, and I want to utilize them to do my retirement planning, because she felt it was just a little bit more than what she thought it was. And she was like, that's a full-time job. And I said, yeah, that's why people like me are in business, right? Because it's a full-time job, especially to do it correctly. So it was funny because she realized, Ron, that like you said, she might have had a little too much overconfidence in herself. And again, confidence is good to have, but when it comes to retirement planning, this is really, most people plan on retiring only one time, right? So you want to make sure that you get it right the first time, and again, work with a professional that you could establish a relationship with, and you feel that can put your best interest first, and make sure you don't get caught in that where you're too overconfident and maybe hurting yourself.
Number one, I want to say I'm glad that woman decided to call you. And number two, a lot of people out there have been really confident about things until recently, because we had such a long run there of so many years.
Yeah.
Everybody was feeling confident. Hey, things are going great. I'm doing really well. But then when some adversity came along, that some of that overconfidence may have disappeared. Also, there are people out there who have overconfidence in a certain amount of money. And I know it's, a million times people have said to you, once I get to $1 million, I can retire. And some people think that $1 million mark is just magical, which in fact, it's, it may be for some people, but certainly not for everybody.
Yeah, you're right, Ron. I have some clients where they have $1 million, and that's going to be more than they're ever going to need, right? I mean, they have pensions, Social Security, paid off house, or rentals, cash flow. I mean, there's a lot of different reasons that that $1 million is going to be more than they'll ever need, and they're probably going to pass on even more than that to their kids, because they're not going to utilize much of it, right? Where that was the perfect amount of money. There's some clients, Ron, where they only need $300,000. There's some clients that need $3 million, right? Because it all depends on how much income are you needing from that. What type of investments are you putting that in? What's the risk tolerance? What's the expected growth rate? As well as what other type of income sources do you have? Do you have big pensions? Do you have too high Social Securities? Do you have inheritance? Do you have, a lot of rental property income? A lot of these other variants can be a big determining factor in how much money you're actually going to need to retire on, as well as what type of income are you used to and what type of income is that going to have to support in retirement? Because like you said, Ron, that $1 million might be great, but sometimes it might not be enough, right? If you're depending on what you're used to living off of and how long it's got to last and how it's invested. So it's super important, we feel, to plan around how much income are you going to need? And then we can kind of reverse engineer that to figure out, okay, approximately here's how much money we're going to need to retire. And maybe you have more than enough, or maybe we need a little bit more to get you where you need to be, or we got to look at maybe we have to structure maybe a little bit less income, and how would that fit into your plan? So a lot of that is obviously the conversations we have with clients, because you really got to be in front of us. You really got to go through each and every facet, like I said, as far as how it's going to work and making sure it's the best fit for you, and not just hoping we have $1 million, right?
Yeah. With the way things are now, certain rules of thumb no longer apply, really. And a lot of folks have overconfidence in certain rules of thumb that we've always heard, like, once I get to $1 million, that's cool, I can retire. May or may not be true. But also things like I can withdraw 4% of my savings every year. Maybe at one time that was pretty much true, but these days, who knows?
Yeah, it's funny you brought that up. I remember, and I'm just quoting here, so don't quote me on this exactly. But at the end of last year, I had read an article that was published. I think it was written by Morningstar, and I think Michael Kitces had shared it on social media or something. So I was reading through it, and it was funny because Morningstar was saying in 2021 they were saying. I think it was 3.3%, Ron, instead of 4%.
Yeah.
And then now they're saying that maybe 3.8% or something like that was a more sustainable number. Mm-hmm. And for those of you, what that really means is, like Ron was saying, if you have that $1 million in there, what the 4% rule essentially says is that you should not withdraw more than around 4% out of that, and that should be enough to cover your retirement plan, right, for a 10 or 20 or 30-year period, depending on how long you're run that for and what you're invested in, and, of course, a lot of that. So essentially, if you had $1 million, it only is saying that you should withdraw $40,000 a year off of that. And again, the other statistics I had showed were even less than 4%. So you really got to look at what type of income plan you have structured. That's why I tell people a lot that sometimes annuities or structured notes or a lot of these other income utilized tools can be a good offset for some of the money to maybe help pay out a little bit more than the 4%. And again, on the annuity side, some of those are guaranteed for a lifetime. So it's super, super important when you're looking at stock market, you're looking at bonds, you're looking at ETFs, you're looking at annuities. You really got to make sure you're not getting too overconfident and making sure you're putting together a well-balanced plan that's going to kick off an income that's high enough for you to live off of, but also make sure you have the confidence that it's going to be sustainable.
Yeah, and let's face it, some people just have overconfidence in their own understanding of how certain products work.
Yeah, that's for sure, Ron. I've heard it time and time again where I always like to start off with, some people, they'll say, well, I hate annuities, right? And I always go, okay, well, we just met, but perfect. Let's talk about it, right? So, and it's funny because a lot of the times they don't understand how they work, right? A lot of the times, different types of annuities can be very good, can be very bad. Same with clients that say, man, I don't like ETFs, or I don't like mutual funds, or I don't like stocks, right? Sometimes they don't know how they actually work or what the fundamentals are. And so I feel it's super important when you're coming into retirement planning and you're looking at this. I think it's super important to understand how these products work and really get the education on it, because those of you that listen to the show for a while, I'm not somebody that's going to say, hey, this annuity is good for everybody, or this stock is good for everybody. It really depends on what your situation is and how you're structuring that. But I do feel if we're going to utilize it, it's super important to understand how those products work, right? What the pros are and the cons, because I really am a big believer in this. You talk about stocks, REITs, structured notes, mutual funds, annuities, variable annuities, they all have pros and they all have cons. And so you want to make sure you're utilizing that to where they complement your portfolio, where the pros outweigh the cons, because again, not everything out there is for everybody. So you want to make sure you're finding the right fit, but don't get overconfident and just feel like you understand everything about it if you haven't really spent much time on it.
Some folks out there listening to the show today may be somewhat overconfident in their own decision-making process. They may think, hey, I'm a really logical person. I make sound decisions. But there's a lot of information that goes into making decisions when it comes to your money.
There is so many decisions, Ron. Like when I talk about a typical financial plan, when a client comes in, they're 65 years old, a husband and wife, and they're getting ready to retire, there is huge decisions to be made, right? You got Medicare. You got, when do I take Social Security? I have a pension. Do I take the lump sum option or do I take the payout on it? Which one's better? Do I have a 401k? Do I roll it to an IRA? Do I leave it where it's at? Do I utilize an annuity, right? Do I not utilize an annuity? Are bonds better? Are stocks better? Where should all this be going? And so you look at how things are structured, Ron. There's so many big decisions. And a lot of the times what you need is somebody to help put all of those pieces together, right? And I feel like that's what I always tell people a financial advisor should do. A financial planner should be looking at all those different facets and being able to help advise you and put together a financial plan that shows you how each of these decisions can work, the pros of each decision, the cons of each decision. And if they don't specialize in that, like Medicare or taxes, making sure that like us, we have partnerships that we work with to where we could actually send you to somebody that's a professional in that industry to make sure that everything you have for retirement is kind of done under one umbrella, or making sure it's all done under one plan. Because like you said, Ron, there's a lot of people out there that are very smart and very educated, but sometimes putting all these different pieces together for retirement might not be in your best interest, right? Because you might get in your own way and sometimes and not have the right information or even access to the right tools and services to be able to make that efficient retirement plan that might best suit you. So, I always tell people, Ron, people will ask me, Logan, what is it about your firm that you feel is maybe different than some others, right? And I say, one of the biggest things that we feel we do differently, because again, the stock market's the stock market, annuities are annuities, all these different, a lot of advisors have access to products and services. But one of the things we feel that separates us, Ron, is that when we look at a client, we're looking at their overall financial picture, right? So we have partnerships we work with like CPAs, mortgage lenders, right? Real estate agents, Medicare, legal counsel for trust and estate planning, all of that stuff to make sure that when a client's getting ready to retire, they actually have the full package and they have a full retirement plan to make sure this plan could be successful over that long run and give them the confidence in that plan and not just sell them a product and we'll see you later, but building that relationship that's going to last, 15, 20 or 20 plus years that's to us what we feel separates us. So if you're one of those people out there, again, that's getting close or maybe just starting retirement or looking to get a plan together, I think it's time you give us a call and see if we can't be a good fit.
888-823-PLAN. That is 888-823-7526. Your number to call for Regary Financial, with offices in Hemet and also Redlands. Wherever you are in Southern California today, pick up the phone right now and call this number. Leave a message with your name and phone number. You'll get a call back, and then you can arrange to have a discovery meeting with Logan Sadler, the same guy you hear on the show every week. 888-823-PLAN. That conversation is kind of a getting to know you event, kind of a conversational talk that's not going to obligate you to do anything at all and not going to carry with it any kind of obligation. 888-823-PLAN is your number to call. Logan Sadler is Vice President and Chief Investment Officer at Regary Financial. You're listening to The Financial Beat. I'm Ron Stutz along with Logan Sadler.
This is The Financial Beat.
We're back now with more of The Financial Beat, and the beat goes on. You may say I'm out of tune when I try to sing that, Logan, but I'm sorry. I just can't help it.
I'm always out of tune.
I can't help but break out into a song every now and then. But even if you have a solid financial plan in place, things can quickly get out of tune. We're going to talk about that in just a moment here. But you're listening to The Financial Beat, 888-823-PLAN. 888-823-PLAN. That's a very important phone number. Call that number and you can arrange to have a discovery meeting with Logan Sadler, kind of a getting to know you conversation. It's not going to cost you anything and not going to obligate you to do anything at all down the road. So why not? 888-823-PLAN. Logan is the Vice President and Chief Investment Officer at Regary Financial, serving you in Southern California. 888-823-PLAN. Getting back to the topic at hand here, getting out of tune. Things can quickly get out of tune if you don't make adjustments from time to time. We always talk about how even if you have a good financial plan, it may need tweaking from time to time. And let's talk about some of the areas where we often see people get out of tune in their financial plan. You ready for this, Logan?
I'm ready.
One area where people can really get out of tune and hit the wrong notes, as we might say, is future tax considerations. It's really important to stay on top of that scenario.
Yeah, it is, Ron. It's funny because I feel like a lot of the time we're taught to defer taxes, right? You want to put money into a 401k because you're going to defer taxes. You want to use annuities and things of that sort because they can defer taxes, right? So a lot of the times we're taught to defer, and a lot of the times we're not really having any type of consideration for, okay, you know what, I've been deferring the last 20 years or 30 years. What is this going to potentially look like when it comes to retirement, right? And so when we talk about future tax considerations, that's something where I see a lot of the times, even people that are doing their financial plan themselves that might have good stocks or annuities or whatever they're using, they might have a good portfolio. But so many people out there, whether they're doing it themselves or they're using other financial advisors, they are really missing the angle on what is the future tax implications on this current plan, right? And I feel that's something we really like to take a deep dive in, and we separate ourselves, we feel, because we do look at a lot of the future tax considerations, and we work with a lot of different CPAs and things of that sort to utilize when we need to look at that more specifically, because it's something where, Ron, as we always talk about, a lot of people are feeling taxes are going to go up in the future. And so if we're just deferring, we might be putting ourselves in a situation where our income's still going to be really high in retirement. I mean, we're meeting with clients that, have $500,000 in IRAs or $2 million in IRAs, right? So the problem is a lot of the times all their money has been deferred, and they hadn't looked at different types of Roth conversions or different types of tax-free life insurance or tax loss harvesting or different things like that on a lot of their investments. So when it comes time to put the financial plan together, we're going to be in the same situation we're in now, or maybe even worse if taxes go up, right? So having that financial plan that also looks at things from a tax lens, we feel is just super important and can be very crucial to a financial plan, because it always comes back to, at some point, taxes.
We're talking about getting out of tune, and it's so easily to get out of tune. And we always say we want you to hit all the right notes in your retirement planning here on the Financial Beat. Another category here is having the right amount of life insurance. What can you tell us about that?
Yeah, that's another thing. I mean, us being a firm that looks at all angles of financial planning, life insurance is something where it definitely does need to be talked about, because so many people are underinsured. I've seen, especially some of these people where we got it maybe 10 years ago and we were making $100,000 a year, right? So we got maybe a $200,000 or $300,000 term policy or whole life or whatever it is. And all of a sudden, now we're making $200,000 or $300,000 a year. Well, obviously, that life insurance policy is only good for like almost 1 year of income, right? So that's not going to help our spouse, with the kids and things like that, or college, or even if we're older. A lot of the times we use life insurance for, a lot of us are going to lose some income in retirement, either through pensions, taking a single payout, or, Social Security. If one of you passes away, you could lose the other one, you get the highest one, as well as annuity payouts might be single or joint. So a lot of the times in retirement, you might need some income replacement. And so you utilize life insurance that way too. And I feel a lot of the times people really undershoot on the life insurance and aren't properly covered. And it's something where, I always say it's a really bad joke, but it's true. I mean, life insurance is never cheaper than it is today, right? Because every day we have a birthday, or every day we get closer to a birthday, life insurance, they rate us off age. So you want to make sure going into it, Ron, it's so important to spend the time and look at what you need currently and what you might need in 5 years or maybe 10 years, and making sure you're finding a balance between the two. And I'm not just saying go out there and get the highest possible coverage and make the premiums really, really expensive. That's not what I'm saying. I'm saying you really want to spend the time, make sure you're working with a professional that can help you find that right balance to make sure that is in tune with your plan.
We're talking about getting out of tune here with your financial planning with Logan Sadler, Regari Financial. Again, the important phone number is 888-823-PLAN. Another way you can get out of tune is, on the subject of having the right amount of cash in the bank. Mm-hmm. I know we talk about this a lot, and you talk about this a lot with your clients. Some people have too much, some people have too little. What can you say about that?
Yeah, it's funny you said that because I've seen some clients, like you said, Ron, they make, $100,000 or $200,000 a year. They're maybe RNs or whatever they are. I'm thinking of an RN because one of our clients is this way. And they're used to living off of, good amounts of money. They have high expenses because, again, they make good money. And one of them that literally they had like a $5,000 emergency fund, right? And I thought $5,000, like that would get you through a couple of weeks, and that's about it, right? You talk about a 6-month emergency fund or, a year emergency fund or whatever people are recommending. And it's funny because some people are so far under that. And I feel like it's important to find the balance. But I have seen it on the other end, Ron, where I have a client the other day we were doing some reports for and doing a financial plan for. And he had around, I want to say it was around $500,000 in 401ks and stocks and bonds and things like that, right? And he had that money invested. It was retirement money. And it was funny because he had $400,000 in a savings account, right? And so I was laughing because we did all the puzzles. And of course, what we do a lot of analysis on our planning for clients to really put that full picture together for them. And like I said, it was funny because even he looked at that and went, man, you mean half my money is not earning anything, right? Half my money has been getting beat up by inflation all these last few years. It's not earning me anything. And really, when have I ever used $400,000 cash to go buy something, right? Very rarely. And it was funny because sometimes putting that into a plan shows people, hey, you know what? You're right. I should look at parking some of this money into something. And again, maybe it's the market, maybe it's insurance products, maybe it's CDs. I mean, that just depends on what your risk tolerance is, what your goal is. But I think a lot of people, once you start to kind of show them, hey, this is really dragging your overall account, because even if your 401ks and things like that were doing really, really well, you still have half your money essentially not earning anything, right? So it's dragging everything down when you look at the total performance of the overall plan. So you got to find that balance. And again, that's what we help people do all the time, is trying to look at making sure we have enough in savings and making sure we have enough for emergency funds, but also making sure we have our money working for us, or at least put in a position to where it has a chance to work for us over a period of time.
And Logan, here's one that we could talk about all day, and I know that it's a big subject of conversation on this show, and certainly in your office when you talk to clients, but especially when you first meet them, having the right amount of risk is very important. And some folks out there right now listening to the show today have a lot more risk in their portfolio than they realize, and it really can kind of as a shock when you take a deep dive into their situation.
Yeah, you're right, Ron. And it's funny because people always ask me, well, what do you do at your discovery meeting? Or what does your process look like when you're doing financial planning with new clients or prospects that are interviewing your firm? And it's funny because I always say it always starts out with, what are your goals? What are you looking to do? Do you have kids? Do you have grandkids? What do you do for a living? And then really one of the first financial questions we start to go over is risk tolerance, right? I think that's something that most advisors miss. They just try to say, hey, look at this sweet, 60-40 portfolio I have. It's outperformed somebody or this guy, or, I have the special magic, or I like to use annuities, or whatever it is, right? You hear a lot of that. And I always tell people, it's funny because I don't even know what we're going to use for a client when they come in, because we don't even know their risk tolerance, right? We don't know their goals. They might be, just because they're older, they might still be very aggressive. They might be very comfortable with risk. Some of them might not be at all, right? So it's something where I feel it's super important to kind of talk through that with clients and understand what their risk tolerance is. And what we do, Ron, after we establish what their current risk tolerance is or what they think it is, we actually run a report on their overall holdings and the recommended holdings. So if we're going to move into something, we want to look at what is the similarities and what is the overall risk tolerance of the current portfolio. And that actually shows you some what-if scenarios, right? What if the market was really good? Here's how you could perform. That's great. What happens if the market performed very bad? Here's how it could look, right? And then also in the middle and everything else, which is very important. But like you said, Ron, most people are absolutely shocked when they see what risk tolerance their actual current portfolio's in, and they really just didn't have any idea because nobody spent the time to educate them and go through that and look at things from what their perspective is and finding that right tolerance for their plan.
It's the start of a new year and a good place for new beginnings. Why not call Logan Sadler's office and arrange to have a conversation with him about your particular financial scenario? Logan, it is very important to, we said it's very important to call at the end of the year. It's certainly very important to call at the beginning of the year to kind of get things in place for upcoming 2023.
Yeah, you're right, Ron. I mean, there's a lot going on always in the world, and a lot of people are always, things are always changing in the retirement planning industry. Products change, services change, planning tools change, tax rates change, right? A lot of things can be changing out there. And so that's one of the things I feel it's super important for those of you out there that are getting ready to retire or either trying to get a plan together to retire. It's something where you really want to make sure you're looking for a professional that can offer you a wide range of services and making sure that they're a financial planner and not just recommending one product to every client, right? You want to make sure that they're actually looking at what's in your best interest, making sure they're looking at your overall risk tolerance and what puts your family in the best position to have that successful peace of mind retirement that you're looking for. And if you're one of those people out there, I think it's time you give us a call at the number Ron always tells you here, and he's going to tell you here in just a second. Come in and spend an hour with me, and I'd love to go through your current situation, and again, just kind of have an introductory to see if we might be a good fit to work together.
888-823-7526, but the easy way to remember that is by using the word plan, 888-823-PLAN. The number for Gary Financial, offices in Hemet and Redlands, serving you in Southern California and far beyond. Logan Sadler works with 3 different generations of client families, and many of those clients have been with the firm for more than 25 years. That's a long time. Logan has seen just about every kind of scenario there is out there, financially speaking, and can certainly take a look at yours and maybe give you some ideas for tweaks or some things you need to be concerned about. But you need to reach out with a phone call first, 888-823-PLAN. Call that number right now while your memory's fresh, while you're thinking about it, and you can arrange to have a conversation either by phone or via Zoom or maybe in one of the offices at Gary with Logan Sadler. You're going to talk to the same guy you hear on this show. 888-823-PLAN is your number to call to make it happen. Ron Setz here along with Logan Sadler. There's more coming up on the other side of this timeout. You're listening to the Financial Beat.
Don't you want to see sharp and not be flat in retirement? This is the Financial Beat.
We're back now with more of the Financial Beat. Logan Sadler is on the radio. The Vice President and Chief Investment Officer at Gary Financial, Logan Sadler, has been doing this for quite some time, this radio show, and got lots of podcasts out there and YouTube videos, and the radio show is where it all began. And Logan, of course, works with 3 different generations of some of the client families at Gary Financial, and they have terrific partnerships with local attorneys, CPAs, real estate agents, mortgage lenders, Medicare specialists to help offer you well-rounded guidance and everything that is financial, everything having to do with your money. You can get a discovery meeting at no cost and no obligation for you. 888-823-PLAN. That is 888-823-PLAN. Hey, Logan, a really interesting thing I read about this week. I did not know this until a few days ago. Most of the American flags at Disney theme parks are fake. They have fewer stars and stripes so that Disney doesn't have to follow the flag code and lower them every night. I never really thought about that.
Never thought about that. I'll be honest, I didn't know there was a flag code, so to speak. But you know what? I'll be honest, Ron. To me, that's like you can't fake it, right? To me, it's like that. To me, it doesn't seem fair. That's like cheating, right? Yeah. So,
at the same time,
it's funny that I didn't notice that.
Yeah, if there's a code that says you got to lower them all at night, imagine how many they would have to lower, because I think they have quite a few American flags.
Yeah, from a business standpoint, I definitely understand the extra labor and stuff like that. I totally get it on that aspect. But it is funny that I'm now, every time I go to Disneyland, I'm going to be looking around and counting.
Sorry about that. I'm sorry to put that in your head. So
it gave me something to do while I'm waiting in line.
Oh, yeah, absolutely. And sometimes that can be a long time.
It can.
Let's go to the mailbag here. These folks don't have to wait to get an answer to their questions. First of all, we have a question from Dan in Temecula. And Dan says, I haven't saved much for retirement because I'm self-employed and I've always pumped so much money back into my business. But now, Logan, I'm not sure how to turn my business into a retirement income for myself. Have you worked with anyone in a similar predicament?
Yeah, that's a great question, Dan. And I don't know if we've had a question quite like that. And I love this one because it's a great one. Being a business owner myself, I understand the small business aspect and building a building a business is a hard thing to do, and also what's the exit strategy, right? What does that look like? And yes, I've had plenty of experience helping business owners in this aspect. I have a client I'm working with right now who actually just sold his business for $3 million and is looking for somewhere to put the money and what type of income can we produce, and really kind of facilitating that exit strategy. There's a few ways to do it, right? I don't think any one of them is the best way. It just depends on which way is right for you. And there might even be an option 3. I'm just going to talk through the 2 most common. But essentially, there's one where you could build it up internally, right? So you build it up to where the problem is most people don't understand that a lot of the times the business isn't really worth much if you're not there and that place can't make money or can't operate. It's very hard to build up a sustainable business, right? So a lot of us, as we get older, what we would like to do is the ideal way is to bring in somebody younger or bring in someone else to help run the business, right? So maybe you make them more of an operations or ownership standpoint, and they are able to make money on that business and utilize the business and maybe be an equity shareholder or whatever. Paycheck out of it, right? You still own the business, you're still a partner in the business, but now you're getting money from the business because it's able to make money when you're not there, right? So building up those type of clients is the way to do it. That's option 1, I would say, where you still work there, but you have kind of a successor who's taking over the day-to-day and is able to, still get you a paycheck out of it. The number 2, I would say that's another common way, is build it up to sell. Again, a lot of the times businesses are worth more when you're no longer there and that business can make money, right? People want to know that if you sell the business, if I'm buying the business, that it still is profitable. So start to look at more, maybe if you're in contracting, more longer term contracts, more residual type income producing things to make a business valuation maybe go up. That might be a good thing to look at for when you're looking at selling a business to capitalize on that as an exit strategy. But, I would love to learn more about what type of business you have and really take a deep dive into that, because there's a lot of different ways to slice or dice that pie, but we'd have to get a little bit more specific on what your time frame is and what type of business you own and how all that looks. But absolutely, we have plenty of experience in that area.
Hey, Dan, if you want to have more of a conversation about that with Logan and get more specific, you can call 888-823-PLAN, 888-823-PLAN. Next question here is from Charles in Fallbrook. And Charles says, ever since my kids grew up and I no longer have the child tax credit, it seems that I usually owe $3,000 to $4,000 when I file my taxes every year. Is that a problem as long as I have the money to pay it, or should I be doing something different?
Yeah, I would definitely want to loop in the CPA on this one, but just kind of my input on this. I mean, sometimes obviously taxes have been a huge issue just because a lot of people are making more money than, ever before, as well as, like you said, the kids are out of the house, so you lose a lot of these deductions or write-offs that you have. And it's something where I would say let's look at your paycheck, see what you're currently withholding for state and federal, because you might be able to rework that a little bit to where maybe you're withholding a little bit more so you get a little bit closer to break even. Again, depending on what your income and things of that sort are, that might not be bad. Again, just depends on where, like I said, if you're a super high income earner and you're only owing $3,000 or $4,000, it's not too bad. But if you're a lower income earner and you're getting that amount, having to owe that amount, might be some adjustments we could do on the withholdings. But definitely, I would say give us a call. We could look at that and kind of analyze that. If we needed to, we could pull in a ZPA to verify that we're withholding the correct amount. But not too bad of a situation, but still, it's something where if you could shed the tax bill a little bit and maybe withhold ahead of time, it might be a better way to go.
Next question here is really kind of timely because we talked about rules of thumb. We've talked about how much cash to have on hand. And Barbara is in Orange County, and she's asking, do you have a good rule of thumb, Logan, for how much money I should have in cash at all times?
Yeah, that's always a great question because it is one that sometimes needs multiple repeating because it happens to a lot of people out there. But I have a lot of clients that when we're talking about it, to answer it directly, Barbara, let's say I'm just, again, not giving you specific advice, just talking through a potential situation where, let's say your current expenses with your car payment, all your expenses included, is around $5,000 a month. Right. So the 6-month rule would mean that you need around $30,000 plus or so into a savings account that'd be an emergency fund. And again, I have some clients where it's much more than that. Some of them they need higher because maybe they have rental properties that they might have major expenses come up. So they might need an extra $20,000, $30,000 or $40,000 in a liquid savings because they might need to utilize it for that. Or maybe they have an upcoming purchase coming. They know they're going to be buying a big car or another house or something like that. So you might need excess available. But most of the time I find that most people, they typically, that 6-month rule is typically a pretty good fit. And typically much more than that, like we talked about on some of the earlier segments, where sometimes it could just weigh you down. Like I said, I had a client a few months ago where she had $600,000 or $500,000 invested for retirement, stuff like that, but she had $400,000 in cash, right? So that was an extreme amount to where she had almost as much money sitting on the sidelines. So it's just important to, I would say, give us a call. Let's sit down and we can kind of go over what your situation looks like and try to help guide you best we can and go through all the numbers based off your situation.
We have one more question today, and it's from Peter in Banning. And Peter says, I'm stunned after finding out how high the fees are in my variable annuity. And quite frankly, I'm furious with my soon-to-be former broker. Are these fees normal? It's taken a lot of self-discipline to not call the guy and cuss him out.
Oh, no.
Wow.
Yeah, that's never a good one there.
You probably heard this before, haven't you, Logan?
Yes, time and time again. Sometimes, Ron, I hate doing. We have a lot of programs we use where it actually will do an analysis of the variable annuities and different mutual funds. And it pulls out the expense ratios and the fees and stuff. And what I always tell people is, I'm not part of our job is never to critique or talk bad about another advisor or anything they did in the past, because who knows what the circumstances were at that time, right?
Yeah.
And you don't want to harp too much on the past, Peter, but to be honest with you, yes, it is somewhat normal, especially some of the newer variables might have came down in price. A lot of them are a little bit more reasonable, but it's not uncommon, especially on older ones, 5-10 years old, or maybe even older than that, where we do a report when you add the death benefit, the income riders, the sub-account fees, the mutual fund costs, all that. I mean, I've seen them anywhere between 1% to 4%, just depending on, again, what types of bells and whistles that has on there. And a lot of the times, most of the people aren't even using it for those bells and whistles, so you're paying sometimes a pretty darn high cost on those types of products. And so I definitely think it's something where if you are going to utilize a variable and you're utilizing some of those services you're going to be paying for, you want to make sure you're going to use them. If not, you typically can find a better place either through a fixed annuity or a fixed index annuity, or even through traditional markets, of course, depending on what the goal and purpose of that investment is. But it's not unheard of. So Peter, in that case, so I'm sorry you're a little bummed out there and a little upset, but I would say give us a call, and I'd love to do a report on that and show you what kind of educate you a little bit further on what type of variable you have, but also kind of show you some other options and talk through it and see if we can't find something that might be a little bit cheaper in cost and fit that bill as far as what you're looking for to help complement your retirement plan.
Logan, would I be correct in saying that if you hear something negative about annuity, it's probably a variable annuity?
Most of the time, Ron, I would say like 80, maybe even more than 80%. But a lot of the times you hear, man, they have very, very high fees, or, it's hard to get all your money out, or, the cost and the funds are expensive. When you hear a lot of that type of stuff, all of those are typically variable annuities. Again, every annuity is not perfect. It just depends on what you're utilizing them for. But most of the things that you hear out there, like you said, Ron, tend to be more about the variable annuity. And again, they can be a good fit for some people depending on how you're utilizing them. But a lot of the times they tend to have some pretty big cons to them as far as what the costs are and all of the other things that we had mentioned earlier. But you're not wrong by saying that one bit.
Well, here we are once again at the beginning of a new year, and maybe it's time for a new start with your financial planning. It's all about getting to and through retirement and doing it in the most efficient way. Logan, why is it so important for folks to go ahead and call your office now?
Yeah, the best part about it, Ron, is we try to make it so simple, right? You just call the number that Ron gives you, you leave a message, and somebody from our office reaches out to you first thing Monday morning, and we'll get you booked, whether it's in person, whether it's a Zoom or a phone call. And really what that allows us to do is start the conversation. And like I always say, we're not pushing you off on anybody else. You're going to call in on the number, and you're actually going to meet with me, and we'll sit down and go over your situation. The best part about it is that everything that we do is time sensitive, right? And I always tell people we have a 3-meeting process before we bring any clients on board, right? Typically, meeting 1 is that discovery process to get to understand what it is you're trying to do, what you're trying to accomplish. Meeting 2 is when we'll actually go over, okay, based off what you're telling me you want to do in your financial plan, here might be some recommendations and some tools we could use. And then we actually have another meeting where we go over all of that to make sure it's a good fit. And like I always say, it's the best part about our process, Ron, is we're not trying to rush you through anything to try to hurry up, make you a client, to sell you this cool, shiny product. It's really about building a financial plan and also building a relationship. It's super important that we make sure that you're a good fit for our firm and to make sure we're a good fit for you, because it's all about aligning values and making sure that we're going to be able to provide the right value you're going to need in your retirement plan. So all of this takes time, and all of the tools and services and products and strategies, a lot of that as a financial advisor, the more time we have with a client, the bigger impact we're able to make, the more we're able to utilize some of these strategies we talk about. So if you're one of those clients that's getting ready to start retirement or approaching retirement, maybe you're even 5 years out, it's a good time to make that call. And again, it could make a huge impact by making the call early rather than waiting. So give us a call. I would love to spend an hour with you and see if we're a good fit.
888-823-PLAN. That is 888-823-PLAN. Your number to call for a discovery meeting with Logan Sadler of Brigari Financial. It could be in one of the offices, Redlands or Hemet, or it could be a Zoom connection. Maybe you just want to have a phone call to get some basic answers to some of the things that have been bothering you, some things you're concerned about. At any rate, it's not going to cost you anything and not going to obligate you to do anything at all. 888-823-PLAN is your number to call to make it happen. Again, no charge, no obligation, and Logan Sadler will be happy to talk to you. And listen, he's the same guy you hear on the radio show here. Very easygoing, friendly. It's going to be a fun conversation. There's no pressure involved, no salesmanship, nothing like that. 888-823-PLAN is your number to call to make it happen. Logan, it's been fun being with you today, as always, and I'm already looking forward to next week's show. Here at the beginning of a new year, I mean, my goodness, there are all kinds of good things that are going to happen this year. I just have a feeling.
Yeah, me too, Ron. Really looking forward to next week's show, and I'm super glad to be back here with another year of this show and continuing, with me and Ron, bringing you guys some educational information. And I want to, again, thank you guys for tuning in each week and putting up with us. And we look forward to being back here next week, and really looking forward to a great year.
This is Ron Stutz along with Logan Sadler, and you've been listening to The Financial Beat.
The information provided is for educational purposes only and is not intended as investment advice for anyone. All information discussed is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of BD Financial Group and do not necessarily represent the views of AlphaStar Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, tax, or legal advice. Please consult with your financial professional before executing any financial strategy. Investment advisory and financial planning services are offered through AlphaStar Capital Management, LLC, an SEC-registered investment advisor. AlphaStar and BD Financial Group are independent entities. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability.